Welcome to the Trading Lounge and the Day Ahead Report. And look, not a lot of change in what we've been talking about all last week. The move down through here is still completing in 5 waves. Once it's completed, then we'll be looking for a move to the upside, looking to make new highs above here. We also need a turn in the US dollar while I'm just here. From the high here now, we appear to have a 5-wave structure down through here, and that's in the opposite direction to this. So that should give us an ABC retest back up towards the 80 there somewhere, and then fail and turn to the downside. Now, as it does that, then we would be looking for the US dollar here, the Dow Jones and the S&P 500 to move up based on that situation there. But while I'm here, it's always good to explore both sides of a wave count, and the other side to this would be more of a bear market where we would have a 5-wave structure down through here, then looking for a 3-wave structure back, and then another 5 waves moving down through here, and so forth, moving down further. So that's a possibility, but it's not our bias at this stage. But it does bring us to the point that once we do establish a low in here, we can't confirm that just yet. We think another session should just about do that. But what we will be looking at next week is the actual move up through here. In either case, because we've got 5 waves down through here, in either case, we would be looking for a move up. Now, this move up, will it be in 5 waves or will it be in 3 waves? That's the question. So 3 waves would give us a corrective pattern and then a further move to the downside. A 5-wave structure would takes out these tops here. Now, in both cases, the beginning of the move up, the first, if it's in 3 waves, then that 3 waves could turn into 5 waves, and that would be the impulse wave we're looking for, and then we'll get another 5 after that. So the first 3 waves that move up there will have the same structure, and in fact, each leg in that first 3 waves will also be the same as well. They will be 5, 3, and 5. So, it's just going to be a little bit to see that sort of turn there. So we'll just be looking for sort of confirmation. In terms of trading, it will be moving up that way. So we will have long positions moving up through there based on support once we got that low into place there. But just looking at this particular move down through here a little bit further, this is what we're looking at. We're looking at this as an A wave and a B wave and a C wave, as you know, and we'll be looking at this structure coming down through here as wave 1, wave 2, and then the 5 waves in the 3rd wave here, and then the 4th wave can be to this point here in terms of an A and a B and a C. It could also be the 4th wave on top of there as well. We'll just have to see how we go with that. And if that's the case, then we'll get 1, 2, 3, 4, and 5 down to here a little bit further. But otherwise, we can look at the 13,272 area through here. But we would be looking at a low, taking this low of this 3rd wave out here. So a little bit more activity. And the 4th wave can always be quite complicated when wave 2 is simple as such. So that's just that. That's the same thing as the Dow Jones as well. The S&P 500 is in the same boat as well. And, we were looking at this coming down lower through here the other day, last session, because the Nasdaq had already pushed lower as well within its 5-wave structures to the downside as well. So if we can have a quick look at the Nasdaq, and it's got a slightly different pattern than this whole top pattern here. It was a little bit more bearish. So when we look at it here as such, we're looking at a cleaner ABC correction, a nice sort of move down through here, a B wave moving back up to supply area through here, and then we've been observing this move to the downside. So every trend of each degree has got a beginning, a middle, and an end, and the middle would be this fast bit in the middle here, the 3rd wave. So once again, we're looking at a 4th wave in here, and it's just a little bit sort of messy in here, but looking into here for the low. So we can't confirm the low, be it the Nasdaq, be it the S&P 500 or the Dow. We can't really confirm that yet. It just depends how you count this situation in here. But just drilling into that section here, this last 5 waves down, the 1, the 2, the 3, maybe the A, the B, and the C to here, or 1, 2, and then 5 waves in here, and 4 and 5. So if we just drill into that a little bit further as well, That's the move coming down through here. So this is the last little 5 waves, which would be on a 15-minute chart. The 1, the 2, then the 1, 2, 3, A, B, C for the 4th, and the 5th coming down to here somewhere. So that'd be the 3rd wave down. Then the 4th, coming, I just put it up here because it normally pulls back to the 4th wave 1 lesser degree. But it really needs to stay under that. It can't go back up under and bridge that wave 1 low there. So yeah, so then we'll be looking for this down. So I did say a session, I don't know, it might take a tad longer, but everything always takes longer than we think it does. But look, that's drilling right in down to the last little sort of low there. So let's just sort of see how we go with that. The European markets would be the same but slightly different. They seem to be a bit more advanced, and what we mean by that is that, as we pointed out last time, this move up through here, which we had in the wave 4 for the other stocks, counts nicely as a 5-wave structure up through here. So we've labelled that as 1, and we're looking for an A and a B and a C to come back for wave 2. The 61.8 retracement level here is, sorry, up here. I thought it was at the 72, which I think I put in the text in the report. But look, you know that I'm a favourite of 72, so even 72.20 would be would be a go there, or even 72.27. So, but somewhere in there, we're looking for an A and a B and a C to come back, and then a push to the upside from that point there. So that's the DAX, and the UK market would be much the same as well. I won't pull into that one. I'll just drill in here a little bit. That's the DAX, the 5 waves up, the 1, the 2, the 3, the 4, and the 5, and then the A, the B wave across to here. We're looking for a C wave down, so we've probably got down for 1, back for 2. This is the 3rd wave still unfolding here, so there'll be a 4th and a 5th coming back into this area through here where there will be support there. The FTSE's the same in a sense as well. We're looking for, this is a 2-hour chart, so it's just a bit more condensed, but basically 5 waves up, and then the A, the B, and the C coming back through here. So the 5772 there, we really need to stay above that as such. It can spike down below that, but we can't find it as a retested resistance. And the other point here too is that the main number here is the 58 here, and you can see that we're getting equal swings now. So the distance below here is roughly this one here, this distance here, and these two distances here are quite, so it's really working into that 58 there. So it will, in due course, in its own way, find that number as support or resistance, and recognizing that is the key point. As I mentioned before, the Elliott wave helps us with the direction. Sometimes the Elliott wave is really easy and simple, especially when it's in a sort of a larger impulse wave. But when it's in a corrective wave, it gets a bit tricky, and we just need to be patient until it unfolds and sets into play there. But using Elliott when you're very confident about something is great, and it's for the direction. But when it comes to trading, we use the price. So the Australian market is pretty much doing what we sort of expect it to do, but it's finding the 4,500, 5 being the second strongest number, as resistance. It hasn't pulled down as much as the other markets across the world has, so we know that there's good support all through this lower region here, really sort of pinning it to the 45 here. But there's obviously some supply up there because it keeps getting knocked down all the time. So it is a battle between supply and demand. But we would be looking for the first high above this level before we see the larger correction. So in that there, we're still looking at this as being a possible 5-wave structure to the upside, and an A and a B and a C here. The ABC would be down for 1, back for 2, the 3, the 4, and the 5. So once again, we're waiting for this to complete to the downside. If the 4-7, this whole area here, the 65, the 72, and the 80 become a retested resistance through here, then we've got a larger, messier correction unfolding as well, and we just need to be more patient. But the pattern across here is corrective. So this pattern moving down through here is in 3 waves here. So that alone makes it corrective, and eventually we should have a high above this. So that much I do know. how ugly it gets here is something that I don't know, but the bias for the short term is that it does appear to be positive to the upside. It does appear to be corrective to the downside, but we can't confirm the low in here yet. So a move down through here would be nice, and then a move up here and finding support there would be the setup on the 72, and then adding to this one, and and then adding on top of the 90 even, and moving in from there. So basically, any long trades under the closest largest number is always at risk. That's the bottom line. So this number is resistance. It's not support. So the bias is accommodating more risk at that point there. So yeah, that you need to sort of understand that basic point. The other point with this is that the base metals were rather negative, which is obviously going to flow an impact back into the ASX 200, which carries obviously a lot of weight within that. So let's have a look at those. Okay, so for the gold market here, we've been working through the 1772 number and the subgroup 2, the 65, 72 and the 80. And as you can see there, it's it's found it as resistance and hasn't been able to maintain support. So obviously it drops down to the next level, and this failed retest here. So we're pretty much on track for moving down further, and the target was 1736, the previous low through here. But that's just sort of splitting hairs. Let's just see how it works with the 1750 as support or resistance through here. So we can expect a bounce off through here. If it does this sort of pattern here in a smaller sense at the 1750, then we'll see it drop down through to here. But there is support moving into this area here because of this block of volume through here as well. As you can see, this dropping down through to here. That's how trends are, and if that, that's it's just where the volume sits. So if this support doesn't hold, then we'll be looking at this support down here. It's just the way it is. So yeah, so look, that's sort of on track to come lower, and what we're looking for, once again, we're looking for the low in there, and of course that's going to be, this market will be moving with indices and the influence of the US dollar as well. For silver, pretty much the same sort of thing as well. From the 35 high here, we're counting 5 waves down, which would be down for 1 and back for 2, and then in through here 5 waves down for the 3rd wave, the 4th wave, and the 5th wave here, which I don't think's finished. We're kind of, that would be about the middle of it. That strong bar down through here would be the 3rd of the 3rd. But wave out of 5 waves, the 1, the 2, the 3rd wave down to here, the 4th and the 5th should end up, into support here. Of course, also the 33 is the closest largest number, but 10, 20, and 30 will slow this trend down, simply because there will be orders sitting at those round numbers there. The copper market as well, we're looking for it to have its 5 waves down. So we're staying pretty much with the path that we talked about over the last couple of days. So yeah, basically down for 1 and back for 2 here, and then 5 waves down through here for the third wave, and then we're looking for the 4th wave back. It did pull a little bit high. It normally pulls back 38.2%, or to the 4th wave 1 less degree, which is here. And also a bit of a no-no in Elliott terms, or breaking one of the 3 rules, is the 4th wave pushing through the low of wave 1 here into one's price territory through here. So it's breaking a rule. But when you're working with derivatives, leveraged products, then that's a bit of a common occurrence. So we will stay with that, and we'll also stay with this wave 5 coming down through here of wave C of wave 4. This is also not fully developed yet as well, but it's well into the 2/3 of being developing through here. So we would still have a little 4th and a 5th to come down through here. So like the most of the other markets as well, that's pretty much the same sort of pattern there as well. The oil market, there's different ways to count this, but I think that it's important to to understand just the psychology of the price of what's occurring here, the closest largest number is 90, which is the medium level, and then you've got group 1 above it, and then you've got group 2 below it, or the 88 here. So 88 is doing its job in holding the price to the closest largest number, and group 1 here is holding the price to the closest largest number as well. So the 88 as a tested resistance creates a serious sort of short position in the market, and support on top of the 93 creates the long trade from there. Now, of course, it's always nice to get it before that happens, and that's possible as well. This move up through here can be counted as a wave 1 or an A wave, wave 2 or B wave, and 5 waves up for the C wave, because the C wave's always got 5 waves in it, and that can be it could be a smaller wave 1, or it could be the C wave there. So this move coming down through here, we can count this on the charts as developed as a triangle pattern, but it can also be counted as an ABC here in terms of the move down the A, the B, and then we're looking for 5 waves down for the C wave here. And it's good, the further it comes down the better really, because if it does come down through here and then develop support on the 91 or 92 they're places that you can build the trade into if this is in line with the indices pushing up and the US dollar index pushing down. So let's have a look at that US dollar index in a little bit more detail. Okay, the US dollar is getting a little bit closer to resolving itself. We know that this is a wave 4 coming through here, and we'll be expecting a wave 5 to the downside. What's not 100% sure yet is that will we get one more push to the upside before we get that downside, or has the downside already begun from that particular high through there? That's what we're trying to figure out. And in looking at that through here is that if we took this high here as the completion of the whole move up through there, then we would have the nice clean 5 waves to the downside through here, which count beautifully to the downside as wave 1, and then we'd be looking at an A and a B and a C as a retest coming back up into this area somewhere, and then we'd see it fail from that point and move down quite strongly from there. So that's the sort of bias we're taking, but I've also got to point out that this high here never really gave a nice strong sort of high above this one through here. So I really need to sort of keep this on the table, which would be the A wave, the B wave, and the C wave, which is always in 5 waves here, as a wave C here of a smaller wave 4 here. So we could move further up here, but as I said before, it will take a few sessions to finish off, but things always take a bit longer than expected. So this move up through here, as this matures through here, this will give us a really good idea of what's going to occur. So I was kind of expecting, if it's going to be to the downside, then we'll see a move up to here, either to this. There will be a resistance here, so we'd probably see a move to here as one thing, then a move back into here somewhere like this, and then a move to the upside here. Now that would give us 3 waves to the upside, and if it's going to fail from that point, then we'd be looking at a strong move to the downside. If, however, that doesn't fail to the downside, then we'd be looking for a structure like this here, 5 waves up, like the 1, the 2, the 3, the 4, and then the 5th wave up, and then that would give us more highs over there. So unfortunately we just need to allow this to play out, but the bias is the 3 waves up with a move to the downside, and the indices would be doing the opposite as well. So we're kind of moving into a nice setup of risk on, as they say, for indices and stocks to the upside. So we just need to allow that to play out a little bit. And the euro will be doing the mirror opposite as such. With the euro here, we're looking at, I should have had the bigger picture up through here. Let's just see if we can find that. We don't need the weekly at the moment. What else we got here? Okay, so we're looking at this being the 3rd wave here, the mirror opposite of the US dollar index, of course, and looking for a fourth wave here, which could be completed in terms of an A and a B and a C wave here. And now we're looking up for 1, back for 2, 3, 4, and 5, making a new high through here. So we'd expect that to trend line here. So we'll just expect some sort of move to make a new high here, and then we'd be looking at a and then a move back down through here as well, such. So not that it's going to go very far, unfortunately, at this stage. So with that in mind there, that's the 3-wave correction, the A, the B, and the C wave here. And as we can see here, it does appear that we've got a nice 5 waves to the upside. So that's why the bias for the euro, for the US dollar, is to the downside. And this would be the euro here is a bit more in line with the DAX and the FTSE moving to the upside. So we're looking for wave 1 up to 130. Of course, there'll be a reaction from that way, and then looking for a 61%, 61.8% pullback through here, which probably brings it pretty close to the 129. And we'll be looking in an A and a B and a C for that move there. So drilling in there a little bit further. Right, I haven't updated this, but this is what we were looking for the other day. We were looking for up for 1 and back for 2. And we had our 3rd wave up through here, so we're looking for a 4th wave. This 4th wave could be there, or it could be there. I think that's it about here, actually. This wave 2 is going to be over here, so a little bit out of whack, but gives you the general idea. This this little wave 5 here is that's there, because that would be the 1, the 2, the 3, the A, the B, and the C, or little triangle there, and then the 5th one up through there. So, and then of course that would make wave 1 to that point there, and then we'll be looking at an ABC back through here. So that would be about the same length there as it would be to, say, from that point. So that's where we'll be looking for. So I'll move back down through there and then a push up. So any long trades would be looking for this A, B, and C to complete, and just see if that's going to be as simple. Wave 2s are normally quite simple, so that makes things a little bit easier. But that's the 61.8% back here, so it can come back into this area through here. So we need to be a little bit careful. We need to allow that to play out through here. There is good support here first, so wave 2s don't always pull back 61.8%. They could be anywhere from 38% to 60% to close to 80%. They can be anywhere in there. There's no real sort of governance of where they should rely. It's just when they do hit the 61.8%, everybody jumps up and down and says, look, see, So, but just be a little bit careful about that. What we will do is just track this down in terms of its structure. That's the best way to do it. The A, the B, and the C. In the C wave, there'll be 5 waves. So let's allow that to fall in place there. And if that does it in that session that you're looking at, then use the sub-levels here to trade long. So a move down below 29.30, the top of subgroup 1, finding support back above that later, then would be the go there for that. The Australian dollar as well. The general gist for the Australian dollar is that we've got another leg lower to come into play. So looking for another move down through to here, 10, just down into here. So, but in saying that as well, this move to the upside through here, that's a 38.2 retracement level back, taking from the B wave here back to here. This move up here can still be counted in a positive manner as well. It can be, we've got it and always had it as an A and a B and a C, and that's completed there, and we're expecting further downside to come from that. But it also can be counted as up for 1, back for 2, and then up for 1 again of a smaller degree, and then back for 2 as well. But if it finds, the 102 as resistance, well, then it's really going to be a corrective pattern here, and that low would be taken out through here, and we'll be looking at a 5-wave structure to the downside there. So in terms of looking at it in both ways, we can count it as an A and a B and a C wave to here, completing there and looking for 5 waves down, taking that low out there. So that's reasonable, and that's the bias that we're taking on. The other flip side to it is that it does count up as for wave 1 here, and then ABC back for wave 2 here, and then 5 waves, 1, 2, 3, 4, 5 here for up for a smaller wave 1, and then this little wave 2 here would come into play here somewhere as an A and a B and a C wave back here for wave 2. So if it does that and then it starts moving up through here, then start to look for the 102.30 here. 102.33 is even a little bit better there. So nice move down through here, then finding support back up on that subgroup 1 there would be the way to go for that to capture any upside there. But in the bigger picture and trading with the trend, while the 102.72 is the resistance, then the bias is to the downside. This as support would be biased to the upside there. And this is the drilling down into the 20-minute chart here. This is the corrective pattern from the C wave here. Whichever way you look at it, from this section here, this 1, 2, that's 3, 4, and 5 into here. So we're looking for a move down into here and then finding support on top of the 102.30s I just mentioned is what you'd be looking for there in that particular case. So that probably won't come back up that far, but it'll be in there, and then it will pull back into this area through here and work across this, both sides of this 30 here, but finding support on that would be the flip side to the upside. Alrighty, well, that's it. The China have got a few announcements on Monday at 11:30 in terms of their CPI and PPI figures. So just day traders need to be mindful of that at 11:30. That's about it. So just recapping a little bit, we're essentially waiting for the US dollar to fail its retest at 80, and we're also waiting for the S&P 500, the Dow, the DAX, the Nasdaq, and so forth to settle into their lows and mature, and then give us some sort of confirmation that we are heading to the upside. But either way, once those lows come into place, we will see a bounce back up. So we can trade it up. But in trading it up, the confirmation will be looking for 5 waves over 3 waves. 3 waves would be a corrective pattern. So it's taken a little bit longer than expected, finding those lows in those markets, in those indices. But we are getting there, and we're on track. So we just need to be patient in terms of getting the direction right within that time frame. Of course, there's different time frames and different structures to trade, and you choose your structure and you set your money management rules and your trading rules up around that degree of structure, and that's what you do. So you can have wheels within wheels moving as well, so that's fine. Alrighty, well, good morning and good luck.